All right, so I cannot talk because I'm losing my voice. So I might start coughing, and if I do, I'm gonna pause the video to finish coughing. My name is Isaac.Duenas. I'm a mortgage loan officer located just outside of Cleveland, Ohio. And today I'm gonna reply back to my brother-in-law Lucas. So if you're watching this is for you, buddy, because you had a really good question. He is looking to buy a home, and he asked me, so how do I know I'm getting a good deal? I mean, how do I know this lender is the right lender for me, for my situation, for my payment, for my interest rate, for the home that I want to buy? All right, so I actually made a similar video to this about refinancing, but I think that for purchase is a little bit different. The first thing you gotta understand is that interest rates are just like the stock market, cryptocurrency, forex, and they're constantly moving. What that means is that if you call a lender to get a quote, to get a pre-approval today, and then you wait a week, and you call Wells Fargo to get the same pre-approval, those two quotes will be completely different from each other because you're getting the quote from a different day, different position in the market. So the ideal situation would be if you call the, like, say if you're shopping around, say that you call three lenders. The ideal situation would be that you call all three at the same time, at the same hour, on the same purchase price. And you're gonna say why? Well, because that would be a fair comparison. You wouldn't be comparing apple to oranges. You wouldn't be comparing today's pricing against a week from now pricing. That's one thing. The other thing is credit wise. To get to get a real loan estimate, you're going to need to pull your credit. Lots of companies these days, I even found companies in Instagram, and that they ask you very generic information. So, how much is the home you want to buy? How much do you have for down payment? How much do you make? Okay, yeah, boom, you qualify. But the reality is that like a loan estimate requires a lot more than that. When we pull credit as lenders, the main thing they're looking at is how much debt do you have? Do you have credit cards? Do you have student loans? Do you have installment loans? Do you have a car loans, auto loans, whatever? And if you do, have you ever been late in those payments? What's your score? Remember that we're pulling three bureaus. We're pulling Experian, TransUnion, and Equifax, and we're picking the middle score, the score that is the average, if that makes sense. Anyway, the middle one. So there's several factors that a good, accurate loan estimate is going to take into consideration. And when you're shopping for a home, when you start looking for a home, you want to make sure you can deliver on that offer, because the last thing you want to do is you want to put an offer and you have these very vague pre-approval letter, if you have any, that the realtor's kind of looking at that being like, dude, you're not serious enough. Like, I know that this is not going to go through. I don't even know how you got the thing. So anyway, I guess what I'm trying to say is you want to pull your credit, you want to tell to a live person or to the internet or whomever you're doing the application with. You want to specify how much money you make. Maybe there's some issues on your credit, so you want to address those up front. You want to tell them how much money you have as a down payment and how you have that money. If you have cash under your mattress, that's gonna be a problem. You want to put the money in the bank, 401k, checking, savings. I don't care. In some way that you can track it, and it has to be seasoned. It has to be there. That money has to be sitting there for at least 60 days for you to even be able to use it for a down payment and closing cost. So anyway, so the first thing is you want to shop around with at least, I'm gonna say, three lenders. And if you cannot make the phone call at the same time because it's almost impossible, then call them back to back. So you finish calling them or finish doing your application online, then move on to the next company, and when you finish with that company, move on with the next company. You can even go one step farther than that. You can actually grab the loan estimate or the numbers or whatever numbers the first company send you, and you can share them with the other ones, with the other two companies, and vice versa. Why do you want to do that? It's because there is several ways to price a loan. I really am trying not to complicate things too much, but we have the retail pricing, which is what you offer to anyone that comes knocking into your door, calls you, fills out an application online. That's gonna be like the rate that everybody gets. Then you have the second option, which is a competitive rate, which if the lender knows that you're shopping around, you're trying to get the best deal possible, then most likely they're going to offer you that pricing, that competitive pricing, because they want to earn your business. And the last offer is the one that like they make literally we make pennies as lenders. Like pricing is like so tight that you're barely paying for the toilet paper in the bathroom, you know? And I mean that's an option, that's a possibility, you know? Like I'm gonna say I use that with my friends and families, and with I have repeat customers that keep sending business my way, referrals my way, and I want to keep happy. I want to give them everything I have. So yeah, you give them the best possible pricing. Which if I were to buy a home, that would be the pricing my company is gonna give me, because it's me. I'm a mortgage loan officer. I have connections. I understand the business. Does that make sense? So so to summarize, you want to shop around at least with three lenders, which, by the way, if you never check your credit, then great. Probably the first time they pull your credit is going to do nothing for you, because I believe that you're able to check your credit at least once without any penalties, any inquiries of anything, at least once a year. At least that's what I've noticed. Uh, but the second lender that pulls your credit, if you're pulling the credit the same day, most likely, technically, it's supposed to not affect you at all. The only time that you get penalized, maybe 3 points, 5 points, is the first inquiry, the first time that they pull your credit. Then after that, if you do it right away, you're not going to be penalized again. They're not going to be taking another 3 points or another 5 points or whatever. You know, technically by law, you have a 45-day window to shop around, to price, to find the best deal, to pull your credit. But I don't know if I believe that 100%. It's even in the website, the consumer report for credit. Anyway, you can find it online. It says 45 days. I personally don't trust that 100%. But what I can tell you is, for what I've seen, if you start pulling your credit with at least three, four companies during the same time or like back to back, then your credit doesn't really is not really affected at all. They don't keep taking points every time that they check your credit. So, all right. So, after you have got three lenders and you explain to them the situation, they review your credit report. They will tell you, yeah, I mean, you are pre-approved for 500,000, 600,000, 700,000. Normally, the lower the payment, I wouldn't focus too much to the interest rate. I would focus on the monthly payment. The lower the monthly payment, most likely the best deal you're getting. And keep in mind, your payment is going to include your principal and interest. Do we agree that regardless of what company you go to, that's not going to change? It's going to be exactly the same thing, right? I mean, it's just math, you know? 3% is the same thing anywhere. So, principal and interest, those ones are going to be the same. Now, the closing cost is where they make their money. How much are they charging for title work? Are they charging you points? If so, how much? And or instead of charging you points, are they giving you credit? Like, are they paying portion of your closing cost? And also, in the quote, are they including your homeowner's insurance? Are they including your taxes? Are the taxes pretty accurate, in your opinion, for that area, that location that you're buying the home? I mean, there's several factors, but I would pay attention to the monthly payment. That is a big indication of what kind of deal you're getting, and make sure that the numbers are realistic. I hope this helps. If you have any questions, you can put it in the comment section. You can send me an email, text, whatever. If you guys call me or send me an email, make sure you put the state that you're located at, the state that the home is located at that you're trying to purchase, just because sorry, it makes a big difference. If you're buying a home in the state of Texas, Utah, Colorado, I mean, there's so many different laws in each state that, I don't want to tell you something that is not doable in a different state, and so on. Anyway, thank you everybody for watching. Sorry, my throat is killing me. I need to take honey and lemon. That's what my grandma said I should take. But you guys have a good night. Talk to you soon. Bye.